Meantime, Citron research saying it is no longer short GameStop. In a post on X, it says it doesn't believe in a turnaround for GameStop, but with $5 billion in the bank, they have enough runway to appease their cult-like shareholders. At the end of the post, Citron adding, by the way, the Kitty live stream was still an insult to the capital markets. You're looking at GameStop right now, trading at $30.65. So
I like that. Just a little gratuitous shot at the end. Just, well, why not? Right?
Why not? Except for the fact that you could argue that Roaring Kitty has roared again and won in this
And it seems like they're
capitulating.
They got burned again.
Yeah.
It sounds like.
GameStop won by issuing all those shares.
Yeah. They got $5 billion in the bank.
$3 billion, but yeah.
Let's quickly review everything going on with GameStop as of right now. First, GameStop announced yesterday after market close that they completed the at-the-market offering of 75 million shares and raised approximately $2.137 billion before commissions and offering expenses. This, combined with the $933.4 million they raised in the prior offering, and combined with the roughly $1 billion in cash they had before the offerings, we can estimate that GameStop has roughly $4 billion of cash on hand right now. That is fantastic for GameStop. When you look at GameStop's balance sheet, you can see that the company did not need to raise capital these past two offerings, unless they have something in mind to transform the company, and that is what a lot of investors are thinking. Also yesterday, the U.S. District Court of the Southern District of New York dismissed the BBBY lawsuit against GameStop CEO Ryan Cohen. This is very good news for GameStop, because now Ryan can direct his attention to running the company without being tied up with a lawsuit. And finally, Keith posted a meme on X yesterday with Options Basics 101 on a laptop and a poster of someone exercising in the background. Take that as you will. Now let's talk about Andrew Left's Citron research. I find it amusing that they say Keith's live stream was an insult to the capital markets. All I can think to myself is, yeah, so what? Keith is just an ordinary guy minding his business, posting memes online, and sharing his opinions and his positions transparently with everyone. There's nothing wrong with that, nothing at all. In my opinion, a greater insult to the capital markets would be when notorious short sellers use the smash and grab strategy. Some time ago, Andrew Left spoke with Bloomberg about using the smash and grab strategy. This is when a short seller takes a short position in a company's stock, publishes a horrible scathing article about that company, and then sells their short position within 30 minutes of the article being published. In other words, they cash in on the panic that they themselves have caused at the expense of everyone else before anyone has time to verify or refute their claims. Is that not an insult to the capital markets? I'll let you decide. At the end of the day, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers. And we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.